Good morning, and welcome to the Bitcoin Street Journal Market Update. I'm your host, Anna, and today is Tuesday, February 24th, 2026. The green shoots of optimism we saw just last week have been overtaken by a chilling frost. The market is in the midst of a significant, fear-driven correction. But this is more than just a simple dip in prices. It is a crucial test of the market's conviction, a stress test for its underlying infrastructure, and a moment of clarity for its participants. Today, we're going to take a deep dive into this changing tide. We'll begin with a detailed analysis of Bitcoin's battle at the critical $63,000 support level, a battle being waged amidst a crisis of confidence. We will then examine the duality of decentralized finance, where the catastrophic failure of a major platform serves as a harsh lesson in risk, even as innovators build more resilient systems. From there, we'll unpack the powerful and often misunderstood market forces of tokenomics. And finally, we will look at the relentless strategic consolidation continuing in the Bitcoin mining sector. Let's begin. Our first deep dive takes us to the heart of the market action: Bitcoin's precarious position and the grip of fear. The leading digital asset is currently fighting to hold the $63,000 line. In technical analysis, a support level isn't just a number on a chart. It's a historical and psychological battlefield. It represents a price point where buying interest has previously been strong enough to overcome selling pressure, halting a decline. The market is now asking a critical question: will that line of defense hold again? The psychological importance of this level cannot be overstated. A decisive break below it could trigger a wave of stop-loss orders and, more importantly, a phase known as capitulation, a mass surrender by investors who can no longer bear the pressure, leading to a rapid and cascading sell-off. This is the precipice on which the market currently stands. Fueling this downturn is a clear narrative of institutional cooling. For the fifth consecutive week, the U.S. spot Bitcoin ETFs have recorded net outflows. We must analyze what this truly means. These ETFs have been the primary vehicle for traditional, large-scale capital to enter the market. Sustained outflows indicate that these major players are now reducing their exposure. This is not happening in isolation. It's a direct response to a nervous global macroeconomic environment fraught with concerns over potential new trade tariffs and rising geopolitical tensions. In this context, the pullback from crypto is a logical de-risking strategy, as institutions shed their positions in what they perceive to be higher-risk assets. For a perfect case study in this professional de-risking, we look to the National Bank of Canada. This is not a small player. It's an institution with over $421 billion in assets under management. Recent filings reveal they sold 1.04 million shares of Strategy, a company known for holding Bitcoin on its balance sheet. But the key is in the details. They did not panic sell their entire position. They still retain over 1 million shares. This is a hallmark of sophisticated risk management. It is a calculated move to take profits off the table and reduce overall exposure without abandoning the position entirely. It stands in stark contrast to the all-or-nothing sentiment often seen in retail markets and serves as a clear signal of the cautious, professional approach now being taken by institutional capital. Our second deep dive explores the profound duality of decentralized finance, where catastrophe and consolidation often occur in tandem. We begin with a post-mortem on Step Finance. This was not a minor project. It was a major portfolio management platform on the Solana ecosystem, a tool used by many to track their assets. The platform has now ceased operations, and the reason is a catastrophic $40 million security breach. The loss of funds is devastating, but the secondary effects are even more telling. The platform's inability to secure recovery funding after the breach highlights a brutal truth in this space. Trust, once shattered, is incredibly difficult to rebuild. This failure is a stark lesson in the ever-present risks of DeFi and reinforces the urgent, industry-wide need for more rigorous smart contract auditing, better security practices, and more robust insurance protocols. Yet against this backdrop of failure, we see a powerful story of innovation with the Orderly Network. They are providing a thesis for a more resilient DeFi future by tackling one of its most persistent problems: liquidity fragmentation. Imagine trying to buy a rare book, But instead of a central library, you have to check 245 small, separate bookstores, each with only one or two copies. Your chances of getting a good price or even finding the book are low. This is the problem of fragmented liquidity. Orderly Network's solution is to build that central library. By integrating 245 decentralized exchanges onto a single shared order book, they create a deep, unified pool of liquidity. This is more than just a convenience. It's a critical piece of maturing infrastructure. It benefits DeFi developers, who can now build and launch trading applications with access to deep, reliable liquidity from day one, without having to bootstrap it themselves. It is a foundational step towards making decentralized markets as efficient and robust as their traditional counterparts. For our third deep dive, we turn to a practical lesson in tokenomics, using the recent price action of the Zero token as our guide. The token slid 12% following a significant token unlock. So let's break down what this means. In many crypto projects, large amounts of tokens are allocated to early investors and the development team. To ensure long-term alignment, these tokens are locked under a vesting schedule, meaning they cannot be sold for a set period. An unlock is simply the date when these restrictions are lifted. This event abruptly increases the liquid, tradable supply of the token. As these early participants, who often acquired their tokens at a very low cost, are now able to sell, it creates intense, predictable sell pressure. Market psychology plays a huge role here. Traders anticipate these events, and it can become a self-fulfilling prophecy of price decline. However, it's crucial to look at the other side of the trade. The report on the Zero unlock also notes that spot buyers are stepping in. This detail reveals a healthy market dynamic. It shows that while some are selling, another cohort of investors with a long-term belief in the project is using the price dip as a strategic buying opportunity, absorbing that sell pressure. This is the market at work, a negotiation between early-stage profit takers and new, long-term holders. Our final deep dive today focuses on the relentless consolidation game being played in the Bitcoin mining industry. We have news that Canaan, a major hardware manufacturer, is acquiring the West Texas mining projects of Cipher Mining. The strategic rationale here is clear. In the hyper-competitive post-halving mining industry, profit margins are thin. The only way to thrive is through scale and operational efficiency. Acquiring existing operational sites is often a faster and more capital-efficient path to achieving that scale than building new facilities from the ground up. The location and terms of this deal are also significant. West Texas is a premier hub for mining due to its abundant and often low-cost energy resources. Furthermore, the $40 million deal is being funded with new Canaan shares, which come with their own lockup period. This equity-based approach is a sign of a maturing industry. It allows for aggressive expansion and consolidation without depleting precious cash reserves, employing a mergers and acquisition strategy that is common in traditional industrial sectors. Tying all of today's threads together, we see a market undergoing a necessary, if painful, correction. Fear is the dominant sentiment, driving a flight to safety and exposing weaknesses, as we saw with the collapse of Step Finance. At the same time, this environment provides clarity. It clarifies complex market mechanics like token unlocks, and it creates opportunities for strong strategic players to consolidate their positions for the future, a trend exemplified by the moves from Orderly Network and Canaan. This is a market that is simultaneously being stress-tested and fortified. That is all the time we have for today's deep dive. I'm Anna, and this has been the Bitcoin Street Journal Market Update. We will be back tomorrow with the latest. See you on the next block.